Have you ever stared at your finances, dreamt of growing your wealth, but felt utterly overwhelmed by the sheer complexity of investing? Picking stocks, researching funds, rebalancing your portfolio, it can feel like a full-time job. What if there was a way to put your money to work for you, automatically, without needing to become a Wall Street guru overnight? That's the promise of robo-advisors, and today, we're diving deep into one of the most prominent players in this space, Ally Managed Portfolios. Ally is a name many of you probably recognize from their banking services. They've built a strong reputation for their online-first approach and competitive rates. But what about their investing arm, specifically their managed portfolios? Are they truly an ally for your financial future, or just another pretty face in a crowded market? We're going to break down everything you need to know, from their fee structure and investment philosophy to their performance and customer experience, helping you decide if Ally Managed Portfolios is the right fit for your money goals. Let's start by understanding what exactly Ally Managed Portfolios offers. At its core, it's a robo-advisor service. This means that once you set up your account and answer a few questions about your financial goals, risk tolerance, and time horizon, Ally's algorithms take over. They'll construct a diversified portfolio of low-cost exchange-traded funds, or ETFs, and then automatically manage and rebalance it for you. This hands-off approach is a huge draw for beginners, busy professionals, or anyone who simply prefers to delegate their investment management. Now, Ally offers two main types of managed portfolios, and this is where it gets interesting: the cash-enhanced portfolio and the market-focused portfolio. The cash-enhanced option has a 0% advisory fee, which sounds incredible, right? The catch is that approximately 30% of your portfolio is allocated to cash, which earns an interest rate. This cash buffer provides a layer of security, especially in volatile markets, but it also means a significant portion of your money isn't fully invested in growth assets. This could be a good choice for very conservative investors or those nearing a short-term financial goal where capital preservation is key. On the other hand, the market-focused portfolio is designed to have most of your money invested in the market, typically around 98% in ETFs, with only about 2% held in cash. This option comes with an annual advisory fee of 0.3% of your assets under management. To put that in perspective, for every $1,000 you invest, you'd pay about $3 a year. This is a very competitive fee in the robo-advisor landscape, especially when compared to traditional financial advisors who might charge 1% or more. The choice between these two largely depends on your comfort level with risk and your investment timeline. If you're in it for the long haul and are comfortable with market fluctuations, the market-focused option is likely to deliver greater growth potential over time. One of the most appealing aspects of Ally Managed Portfolios is the low minimum investment to get started, just $100 for their robo-portfolios. This makes it incredibly accessible for new investors who might not have a large lump sum to begin with. Many other robo-advisors or traditional brokers have higher minimums, which can be a barrier to entry. Ally's commitment to low minimums aligns with their overall banking philosophy of making financial services accessible. So, how do they actually invest your money? Ally's managed portfolios primarily use a diversified selection of low-cost ETFs. These ETFs cover various asset classes, including domestic and international stocks, bonds, and sometimes even real estate. The specific allocation within your portfolio will be determined by your risk assessment, which you complete when you sign up. This diversification is crucial because it helps spread out risk. Instead of putting all your eggs in one basket, like a single stock, you're investing in a wide range of companies and sectors, which can help smooth out returns over time. They also offer socially responsible investing, SRI, choices, allowing you to align your investments with your values, which is a growing demand among investors. Now, let's talk about performance. This is always the million-dollar question, isn't it? The truth is, predicting future performance is impossible, and past performance is never a guarantee of future returns. However, we can look at Ally's general investment strategy and how it stacks up against the broader market and other robo-advisors. Because Ally focuses on low-cost ETFs and passive indexing, their performance typically mirrors the overall market. They're not trying to beat the market by actively picking stocks. Instead, they aim to capture market returns efficiently. This passive approach often outperforms actively managed funds over the long term, precisely because of the lower fees and consistent diversification. Compared to other robo-advisors, Ally's fees are highly competitive, especially with their 0% advisory fee option for the cash-enhanced portfolio. Robo-advisors like Betterment and Wealthfront typically charge around 0.25% annually, while others like Fidelity Go offer a free tier for smaller balances and then charge around 0.35%. Schwab Intelligent Portfolios stands out with a 0% advisory fee, but they do maintain a significant cash allocation in their portfolios from which Schwab Bank generates revenue, which can indirectly impact returns. Vanguard Digital Advisor also has low fees, starting around 0.2%. Ally's 0.3% for the market-focused option is right in line with the lower end of the industry standard, making it an attractive option for cost-conscious investors. Beyond fees and investment strategy, what about the user experience and customer service? Ally, being an online-first bank, generally offers a seamless digital experience. Their website and mobile app are designed to be intuitive and easy to navigate. You can easily view your portfolio performance, make deposits and withdrawals, and update your financial goals. Many existing Ally Bank customers find the integration between their banking and investing accounts incredibly convenient, allowing them to manage all their finances in one place. This consolidated view can be a huge time saver and provide a clearer picture of your overall financial health. Customer service is another critical factor. Ally offers 24/7 phone support, which is a big plus, and they also have live chat available. Reviews generally indicate good customer service, with responsive and helpful representatives. This is important, especially for new investors who might have questions or need assistance navigating their accounts. With that said, thanks for watching and until next time.